Hey, welcome to Appthropology, the podcast where we chat with the people behind the awesome mobile apps. We'll look to understand the biggest lessons they've learned for bringing value to people, and we will dive into interesting stories and insights about how they build and who they build for. I am your host, Jim Lorraine, head of growth at AMP.
And I'm your other host, Paul, co-founder and CEO of AMP.
And today we have Joel Fransson with us, who is Global CRM Manager at Anyfin. Welcome, Joel.
Thank you so much. Happy to be here.
Yep. And we talked about this morning. It is Joel for our non-American listeners. Yeah,
it's Joel, but Joel works. It's fine. Yeah.
All right. We'll keep it. So, Joel, give us a background of Anyfin. What is Anyfin for our listeners who don't know?
That's a good question. Anyfin is a FinTech startup in Sweden, or it started out in Sweden. And today we're active in 4 markets, and we offer financial services to help our users improve their financial health, which is we provide an overview of their finances. They can also save with us, but our primary product is refinancing existing debt. So we also want to position ourselves as the good actor in an industry filled with companies that sort of prey on their users. So that's why we only refinance existing debt. You can't take new loans with us, and we only give you an offer if we're actually able to help you out, because some people have really good conditions on their existing debt, but we only want to make people's situations better, basically.
Mm-hmm. I love it too, because I looked up, I went through some of your blogs and saw that you even added the option. There was a blog in there that you had the option for people to cancel their credit cards through your app, which looked like such a cool feature, because it's to your point, you are helping people improve, not just to get lower rates on their loans and debts, but also to not pick up new debt, which is so important.
Exactly. So, we have sort of this love to see you come, like to see you leave. And that's also part of our business model. We have that natural, we want you to churn to some extent, which is, I don't think any other credit company has that motto. And the credit card thing is in Sweden we have this register. If you have a gambling problem, you can sign up to basically block yourself of all gambling companies. But there's nothing similar for credits, which doesn't really make sense, because credit's also a similar problem. You might have a problem with acquiring debt by a shopping addiction, for example. So we offer the chance to basically block yourself of different credit card providers.
That's awesome. I wish we had something. I wish we had something like that here. I just had something interesting with home debt. I don't know how it works over there, but over here, I'm very, very close to paying off my house, which I'm very happy about. But somebody was like, "Well, don't pay off your house because you can tax write off your loan payment." I'm like, "Wait, am I encouraged to have debt? I'm encouraged to have debt. I should have a home loan so that I can get a tax relief." It's crazy to me. So you just said, I want to stick on that for a minute. We'll hop into the app in a second, but you said your goal is for users to churn. As a life cycle CRM person, you just said your goal is for people to churn. So what does your ideal customer life cycle with your product look like?
That's a very good question. Yeah, and which churn doesn't really make sense for a life cycle marketer to at least most of us. But I think the ideal customer journey would be someone who's been aware of our services based on a recommendation from one of our loyal customers, for example, or you might have seen an awareness campaign on TV, out of home, or an influencer collaboration. Then you go into the app, which we are a mobile centric and app centric company. That's where we have our product, and you submit an application with all of the steps you have in place today, and we run an assessment. If we're able to help you, basically lower the conditions of your existing credit, we will submit an offer, and ideally, hopefully, you'll take that offer, because you're gonna make it. We only give out offers if we're able to help you. So ideally, you would take it, and then the retention part is that you pay your loan in time, and throughout that period, you maybe use our different services to also improve your financial health in terms of getting a better overview. you start saving. So we fix the past, but now we can also move forward to the future. So you create a small little buffer. And we're not aiming towards like, people who are like investing, etc., but people who might not have any money saved at all today. And ideally, you bring a bunch of debt with us and you pay it off on time. And once you churn, you're at a point where you significantly improve your financial health. You don't have any more debt. You have a better understanding about personal finances, and in order to not get into that situation again. I think like, in the future, we'll probably find more ways to monetize our products. Like maybe if we can, for example, like if we're able to like, create a subscription service, because the product we provide and being able to like handle your debt is so good, or like get an overview of your debt is good enough that you would actually pay for it. So today, yes, the churning of our refinancing product is a natural part of our business. But I think in the future, we'll have different products to help you improve your financial health.
So
it's nice to have actually a clear formulation of that concept of a successful exit in a way, which is a completion of the value that you've provided to that user. And in fact, if we're honest, every mobile app has an endpoint, at least in some form of time, or at some scale, right? Maybe it's many endpoints, but to be explicit about it and really know what, you know what your onboarding point is, but to know what the endpoint is of sort of saying, I want to get our customers through to that endpoint. And then, of course, there's a separate conversation around, as a business, can you grow to kind of continue on with that customer? But for also every startup, every business begins with one product and focuses on, does that well, at least theoretically, most would say they should. To recognize the endpoint is actually, I think, very clarifying. So I actually, I think you were using the word churn a little bit tendentiously, right? So a little bit provocatively, but I think the concept there is actually really well put. So I have a question about this in the sense of, obviously, Appthropology, we're specifically and generally interested in the way that mobile apps provide value and how they serve as a vehicle for that kind of value. I'm curious, in Anyfin's context, what is it about being an app that is useful for the product lifecycle or from the customer's perspective? Why is it ultimately just like let's say a desktop, browser-based product?
I think that's a very good question and a valid one. I think, at least in the market we've been in so far, having an app is almost like a hygiene factor. It's an expectation of the users today. And it's important for us to sort of own like some sort of real estate in our users' lives. I think I saw Gartner reports way back ago that like on average, like people check their phones every 12 minutes for notifications and alerts. So which gives us, we can theoretically engage with them every 12 minutes, which gives me as a lifecycle CRM marketer a very important channel to engage and talk with our users. Compared to other channels like emails, I don't check my email every 12 minutes, but I probably check my phone more than every 12 minutes. And I think it's also important for the customer experience to sort of have our own ecosystem where we can control everything. And having in the app, I think I have way more different channels or message types or points where I can communicate with our users than outside the app. I'm quite limited. I have email and push and web push, for example, or text if I'm really pushing it. But in the app, I have so much, and I can really be creative and very personal with the way we communicate and what content we communicate.
I think there were two interesting things on. It seems like you have two approaches in life cycle, and I wanna touch on it a little bit because I think it was really good, and then we can dive back into the app stuff. One is, you said I need to help people understand other products we have, so help people understand other. So while I imagine your product is very sticky, you have very good retention, I would imagine, as you measure it, because you're paying off a loan through you, right? So your customer's paying through you. It's different from like a e-commerce where I swing by and I buy a shirt and then you might not see me again forever, right? But there's two things. One is to expand your product reach. But the second one I haven't heard anybody say yet, but I really like, and that is word of mouth. So you try to get your customers who have successfully paid off a loan with you to talk to other people, or people who have used you to talk to other people. And I think that's a gap that a lot of apps are missing, is they don't focus. They focus on the relationship, like we were talking about, one-to-one, but they don't focus on how to build that relationship between your user and other potential users. So can you tell me, other than offering awesome rates on loans, like are there things that you intentionally do to get your users to spread the word, share the word about the app to their friends or family?
Yeah, there are. It's not as big. It's not that something that we focus on too much today, but it's something that we're building for the future. But we definitely try to get people to refer our services to others. But also the industry we're in, we have a lot of limitations, and because we're a credit institution. And like, for example, in Sweden, you can't offer incentives to take credit. Even if it's just refinancing existing credit, we're still providing a loan to some extent. So you can't say, here's $20 if you tell your friend. But what we try to do for Sweden, for example, is we try to talk about the stigma about talking about finances, educating people about people in a similar situation. It should be okay to spread the word and like discuss your finances, and then in turn, then make it easier for people to talk to friends and family about their situation. And in other markets, where in Germany, for example, we have a referral program in place, so we can incentivize people to refer their friends. So we try to identify people who are loyal in terms of they're staying with us, they're refinancing most of their like share of loan wallet, and also that they do seem to have some sort of like healthy credit behavior. And we try to target them with the like messages to incentivize them to refer our services to others, so they can also reduce their balance of their loans as well as for their friends. And in the future, we're also looking into like building some sort of like a loyalty program around loyalty, of course, but also a healthy credit behavior. So we want to use like a shared value model where there's some economic value for both us as a company, but also for the users, and a specific change of behavior for the positive, healthy credit behavior, which in turns also creates a societal change. So we can actually, hopefully, in the long run, we can impact the society positively by educating and incentivizing good behavior and rewarding referrals. So spreading the word, basically.
Can you give us because I think there's a lot packed into that word educating, and can you give us just like a couple of examples of what are the kind of content you develop, or the kind of simple lessons that you're trying to convey? Naively, we can imagine just obviously being able to pay on time and kind of plan ahead to be able to pay on time is important. But is there more to it than that? What are the other aspects of education that happen through Anyfin?
Well, there's a lot of those are obviously like the basic ones, and probably most people know about them. But sometimes our education is not just about you shouldn't take credits, because some people, they need to take credit sometimes. They have an unexpected cost to some extent. So we try to encourage them to be mindful. So during Black Friday, for example, we developed a plugin for Chrome. So if you were in a checkout for like retail or e-commerce, for example, and they offered credit, we will basically me would pop up and ask them to take like 30 seconds to reconsider their offer or they're taking credits. So at least to also talk about it's okay to take credit sometimes, because at least I've been in that position where I've had to take credit sometimes, but try to be mindful about it when you actually do it. So we don't add that stigma, like you shouldn't do it, because then Most people do, actually. And then we also have different educational programs. We have boot camps in our app, for example, where you can like enroll and you get easy lessons or short and concise lessons throughout that 21-day period. And in my newsletters, I also try to be quite topical on the types of educational material we provide. So during Black Friday, we talked about like part-time payments and installments, etc. Like buy now, pay later. During January, we might talk about like saving and like thinking about the future and buffering, etc.
Yeah.
So I'm hearing blogs, Chrome plugins, messages, articles, education. So you have a team of 200 people, 300 people then? How do you...
Yeah, somewhere around that. It's me, myself, and I. If I'm in a room of mirrors, we might be 200.
So how do you keep up with all of that? How do you manage it? How do you prioritize it? Let me know.
I gotta say it's difficult to some extent. I've tried to set up, like I've tried to enable or democratize as much knowledge as possible. So I have the right tech in place which allows me to do a lot of the work myself. So instead of needing developers all the time, I can build it myself. And that's also why me and Paul connected, because I try to build these scalable solutions, but there's still like some parts missing, which the most complex and the task that takes up most of the work is the creative side. But in the creative team, we do have more people than one at least, so they're able to help out a bunch. But it's up to me as well to like adjust and like fit it into the CRM channel. But I also try to balance the short and long term. And so a lot of these campaigns, especially for a startup, it's important to drive that immediate growth. So we do need to generate revenue short term, because we don't have the same lifetime as bigger enterprises, but also have to build for the future. So balancing campaigns versus automations is very important. And I try to use a framework. I can imagine most people have tried to using frameworks based on based on reach, impact, competence, and effort, which gives me the opportunity to prioritize, in terms of revenue, how many people will this reach? What is the expected impact of that activity or campaign or automation? And also, how much do I believe and do I have any data to add to that confidence and the effort of building it? A lot of stuff, since I have a lot of the tech in place, I can build stuff in hours or days. Whereas if I were to build stuff when I was consulting, it would take weeks. Maybe also incentivized to take weeks, but it would still take pretty long.
There's a lot of elegant structure in there. What can you just to clarify and confirm, when you think about the life cycle of an Anyfin customer, and I've seen it done two different ways with FinTech, do you see it as from download, to register, to apply, to actually accept, and that's the end, and then you hand it over to a different team, and then because the repayment cycle is obviously key, is that still part of the life cycle process, or is that like a collections team? And because that's how you would have to divide up the work, right? At any given month, you could work on your onboarding, from install to register, from register to apply, from apply to accept. But then if you also have the repayment stuff in there as well, like that becomes part of your structured calculation in terms of effort and ROI.
Yeah, absolutely. I don't think my responsibility just stops once they become a customer. I think it spans from even before they download the app. So to some extent, I can feed information to the performance channel to improve their targeting, so we can find better prospects. So in turn, we can make it easier for them to convert lower down the funnel. And also at Anyfin, we've focused a lot on the activation and awareness side of things, or the part of the life cycle. And now since we have a larger customer base, retention is becoming even more and more important. Like the share of revenue generated by returning customers is steadily increasing. And that's also why the focus is shifting slightly towards how can we make sure that our users pay on time, or make it easier for them to pay on time, or stay longer, or understand what other types of credit they could refinance, or bridge that knowledge gap between what we offer and what the customer knows about us. But yeah, definitely it spans way past just becoming a customer.
And also, I guess the thing that we didn't really talk about yet, but as I understand from Anyfin, is that once you've completed a cycle, you can do it again. And most people have more than one, or at least most people using credit, I think, have more than one credit line or credit utility, credit vehicle available to them. And so presumably taking more advantage of Anyfin is a goal there for you to help customers understand how they can do that.
Absolutely. Like there's definitely different customers. Some customers are, say we have young people who have by accident accrued a lot of credit, and they're in a position where they need to reconsider their finances. They might just become a customer and then pay off the debt and never return. But then we have other people who might occasionally use credit. Like maybe during the summer break, they use a credit card to pay for their vacation, and those credit cards usually have massive amounts of or very high interest rates, and they're not based on an individual level. You get an interest rate on your debt, and it's a fixed rate, but you as a person might have really good credit scores, where you should be able to refinance it and reduce your overall cost. And then those people are mainly the recurring ones, the people who return to us on a quite steady basis. But a lot of our users, they do tend to refinance everything at once, and then over time maybe they realize, okay, wait, I just refinanced my installments, but maybe they can also help me with this unsecured loan I have, or the other loans, etc. So yeah, it's a bunch of different customers out there.
Mm-hmm.
Okay, I have to go on a rant here for a second, because as someone who my last company was a credit company, and
okay,
and when I went into it, I definitely went into it and with this stereotype or conception, because I was our technical co-founder, so I didn't think this is the businesses I wanted to build, and my co-founder did. And so I went into it with this stereotype of that there are two kinds of credit. One where somebody is just so desperate they need money now, right, for something. And the other one where just someone is clueless and indulgent, and they're just shopping on e-commerce and buying a lot of things, and so they rack up credit card bills. And neither of those views or kind of concepts, identities is a very flattering or attractive one. And so you build up this concept of credit as being either this desperate thing or this predatory thing.
Mm-hmm.
No payday lenders. I grew up on a military base and near military bases, and there were lots of enlisted folks in the U.S. who are taken advantage of in that way by payday lenders, et cetera. And so you have this negative view. But that's not the case. That doesn't account for all of the ways we use credit by any means. As you said, most people need it. Even the very wealthy actually use it as a tool, but we all need it for large purchases like our homes, et cetera. And then as I learned more about it from a risk perspective, the way those risk models and the way underwriting happens, it needs a history of repayment to really give the best possible terms. So if you avoid it as this terrible thing until you need it, you end up in this actually a far worse situation than if you had thoughtfully built up that credit as a tool in a careful and conscientious way, and then you end up in a better situation. And whether it's you need it for buying a house, or you need it because you've been hit by a layoff in a tough economic time, with inflation, cost of goods going up. And if you avoided it, so I think there's this whole element of education, but also of figuring out what parts of my consumption should I use credit for? Should it be big purchases or small purchases, right? Like there's a lot in terms of using it as a tool well. So anyway, needless to say, I think your job is immense, but I think that there's that all of that detail is important because otherwise I think fintechs get an unfair
you get a bad rep.
Put in an unfair bad rep in the sense, because that's what people are thinking of. It's either predatory lending or desperate people. And if they're desperate, you should really just be giving the money away, not lending.
Exactly.
Exactly.
It's about that mindful spending. Like you can mindfully handle your credit score. I think it's also a different, I would imagine like the US, like the credit score is so, like it's so available to you, which is, it's not the case here in Sweden the same way. Like you don't really know like how good your credits are until you apply for something, or it's like a black box. It's not really something people talk about.
Absolutely. Although fair enough, like when I took my first loan for a car loan in the US, I didn't actually know anything about my Equifax score or credit score. Had no clue in my early 20s. But my business was in India, and definitely India is in a place where the whole concept is quite foreign, or not foreign, but just not very well known outside of major cities, outside of a particular portion of the population. Mm-hmm. Informal credit is extremely well known, but formal credit and how that works as a tool. Yeah. So there's a whole lot of room for education.
Yeah. I think that also that like asymmetric information, since it's quite publicly available in the US, like you can sort of understand, okay, how am I comparing it to other people? And in Sweden, like since no one talks about it, you don't really know, is my interest rate good? Or is it actually, it's possible to make it better? And that's something we want to like open up the discussion about. Like it's okay to talk about finances. It's also okay to compare and like try at least to try to challenge the status quo of your existing credits. But yeah, I think we're like the company I'm in. It's an interesting position within this industry as a very different type of actor.
Yeah, I was that person, Paul. So I couldn't buy my first house because I never used a credit card. I had a debit card, but I never took any debt of any kind. I bought cars in cash. I did everything responsibly. And then they're like, you can't buy a house. And I'm like, what? Like I did everything the right way. Like I've never taken money from anybody for anything. So why? But I understand you're not proven, right? And so I feel like it was lacking in education. My wife had the credit, like because she had credit cards, and so to me it was just the most backwards thing. But I do want to poke on one thing on the app really quick because I hear this a lot. There's a lot of benefit for us to have an app. Like you mentioned, I get more communication channels. You get more of a retention. You obviously have it because I set up their payment with you. But for a lot of other people who don't, it's perceived as retention, right? If you have my app, that's retention, and some people see it that way. So what are the benefits for your user? If I could turn that around, because we get a lot of benefits for you, but what are the benefits for your user specifically of having an app versus like working through a website?
I would say maybe it's just my bias, but it's also easier for us to create more seamless solutions for our users. So it's easier to apply. It's easier for us to like fetch all the data and that we require for an application and instantly give you an offer or to provide you with an overview directly in one platform for all your different accounts all over the place or all your different depth. So I think for the user experience, having an app gives us a better platform to build our products on and to offer you more sophisticated solutions that can provide you with the content or whatever you need in real time. But that might be possible with the browser as well, but maybe it's easier with an app at least.
Yeah. No, I like that. I like the user experience, and it is, when you deal with finances, it's kind of nice to be in a walled garden. Not be in the whole, you almost feel more safe having it like in one spot. It's on this app, and I'm not like going to the greater web everywhere to pull my financial data. So I get that.
I mean, that is probably a big thing as well for users, like just the trust factor of having an app. Like I feel the same way. Like if you're in an app store, you have an app, you feel more credible. I can imagine if you have a wonky URL, it's like, I don't really trust this. And it's like there's errors all over the web page. Doesn't really add to, so it doesn't really feel like someone I want to hand over my money to.
Yep. I noticed on the website too, you had, your focus on security and the same security as you'd have with a bank and things like that, which I think people come to expect, but it's a sales tool as much as anything, because part of what you're doing is encouraging people. The other part is you're removing barriers and doubt and uncertainty and fear, right? So I think you do a good job at that. But
thank you. I'll let the SEO team.
No, it's an important piece, and I think it's hard. There's a great quote, which is, "It's hard to read the label of the jar that you're inside of," right? So you can't, and I think some things we assume and what we can make assumptions about could end up being like one of the most convincing features, right? So we assume that we need good security for someone to be able to log in and then have their credentials be safe. It's just, like you said, it's par for the course. It's just expected. But yet, if we don't actually say that out loud, some people might assume, what is this app? I don't know this app. They want all my financial stuff, my loan information, and I'm hesitant to give that out. So it's important that you address kind of both sides.
100%, especially for a smaller company that's less well known. Like when we go into a new market, it's so important that we establish the trust and confidence of those users in that market. Because who wants to, like, when it comes to finances, you do want to be in a box garden. You do want to feel like you're really safe and that it's a trusted actor. So everything we do needs to be really on point. If we provide a bad experiences, like things fail, that really reflects on the trust and confidence of those users.
No typos all over your website, right?
Not a single one.
Yeah, no, that's good. That's good. Well, if you don't mind, if I could ask a little more about that, because we've talked about education and stuff. So what is this more on the performance side, or does that fall on you too? There's two pieces. One is the enticing, right? Somebody to participate. And I think you guys paint a beautiful story. I mean, who wouldn't want to pay less? And all over the website, there are examples and testimonials and all this stuff of how much you save the average person by consolidating their stuff through you. The other point, to Paul's point, there's a lot of people who are loan consolidation. And I think, again, it gets kind of this concern that it's predatory and all that. So is there work that you do? Does it fall on the performance team? What kind of actions do you take to help people reduce their fear as well as, be excited about engaging with you?
I think that's one of the biggest challenges I have for new applicants, at least, to understand that there's nothing special in the fine written part. Like, we're very transparent with what we offer, so we don't have any like hidden fees, etc. I think other consolidation companies, they might their upsell is for you to take on more credits. So maybe they also offer credits. In turn, we just want to capture the credits you have today, but we don't want to incentivize you to take on more. And parts of, like, for me, it's definitely important to, during the onboarding activation phase, like, convey all of the important messages and like trust the signals that I can show to provide them that they are in a safe environment, that we won't, like, what the number you're seeing is not going to change. Like, what you pay is what you get, what you see is what you get, at least. But yeah, so I try to. We have, like, if there's a period between when the person applies and if they sign an offer. Most users, they sign an offer immediately, but there's still a handful of users that they want to reconsider, like maybe take their offer and like review it and like compare it to other websites, etc., or companies. And during that period, it's important for me to understand the pain point this user might have. So maybe we try to identify some sort of intention they might have had with their application and provide different, like, information and metrics that might be able to ease their way through those or mitigate those barriers they have.
That's cool.
There's so much we've been talking about that has to do with communication and content and education. I think that's because that's the reality, is that once you've developed that fixed product, and I'm sure it's changing regularly and you're updating the widgets, et cetera, but it's the content that's contained within that product that ends up being meaningful, right? Like the app is the vehicle for the message. The message is how you speak and communicate and educate and, and reassure customers. So what we've talked about so far is, a little bit of your process with that and how you prioritize that and how you structure that. You just briefly mentioned that there is a larger creative team or a separate creative team that does a lot of this. I would imagine in a more the more comprehensive way, in the sense of webcasts or webinars or longer form content and things like that. Can you tell us a little bit more about that relationship between those two teams, since you're really determining a lot about how and when you reach out to a person and what the specific element is appropriate at any given time or within that user's life cycle, and they're creating just this bigger stream of the broader topics or the deeper subjects that need to be written about? How do you guys coordinate that? And what does the relationship with those two teams look like in terms of process? How do you hand things off and deliver? Is it a series of meetings? And, you can stay high level or share some tactical insights.
Sure. I can start high level and then dig into the nitty gritty stuff of the process. But I think overall it should be a very close collaboration. I think we also talk about a lot of data and analytics. We talk about like one source of truth, having like one source of truth in terms of like data analytics. I think it's also important to have one source of content, so we can ensure that all the content is aligned across every single channel. It's on brand. It's verified and approved to some extent. It works. That's what the creative team can provide. But it also puts a lot of pressure on them because they also have to produce a lot of content to a lot of channels and move at a very high pace. But the relationship between CRM is that I have insights on the users, which I then provide to the creative team so they can produce relevant messages for these users. And then the CRM team is also, or me, is the distributor of that content. And it's like a circular relationship where we go back and forth. And then once I distribute it, I analyze and report the feedback back to the creative team so they can also improve their targeting or their content they produce. And I think in practice, this is a quite tedious process where it takes a lot of back and forth. Usually the creative team are not they don't like numbers too much. Obviously, they chose a creative occupation. So it's me trying to convey the insights and knowledge that I share or I know, and for them to then dig into the creative part, like producing stuff. And we have things and try to move forward, but it's a slow-paced process. And in practice, you do produce something that's for a large group of people. I provide insights for a large group of people. It becomes very one too many. And I think in theory, it's also why I like your product. Full disclosure, the app product is exactly on this topic, that I want to be able to produce insights on a very personal level, and the creative team should have the capability to produce content on a very personal level. So we can create that one-to-one personalization at scale. But in practice, usually the tech is not in place, or there are a lot of unscalable solutions. So having all of the content in Google Drive or in Slack or whatever, however you produce it, it's not a scalable solution. Then you're going to be stuck in that position where you target a lot of people with the same content.
Mm-hmm. Yep. And it's amazing how personal finance is. There's a reason they call it personal finance. Everybody's situation and what they're looking for is different. Every insight is different. Things affect people depending on what kind of debt and how deep they are in debt and what they've signed up for and what I'll say credit vice, but whether it's whether it's loans or credit cards or bad timing in the market with interest rates or all that stuff. So that's awesome.
Exactly. I can also give an example of the more. So usually when we run a campaign, I identify or they have a concept for connected to the communication plan. And I find different segments and identify how we should target these segments based on the concept that they have. I deliver those segments and they produce the content. So they might have different copy depending on which segment I'm targeting, and then or digital assets, etc. Then I send it out or distribute it, and then analyze the result and report back. So next time we're doing some campaign, they can use those learnings. But then it's tedious for me because if I run tests, it's not as easy for me to find 1,000 different segments or for them to produce 1,000 different copies or images.
You've implicitly incorporated a whole other team, which is sort of a data and analytics team, because you are probably more statistically and quantitatively inclined than a lot of CRM folks in terms of your experience, but you have so much on your plate that like diving in and doing those analytics, even if you can do them, you just can't have the time. So now there's kind of an interplay between 3 different teams. So
exactly,
clearly an operational challenge there.
Well, cool. If it's cool with everybody, I need to wrap us up pretty quick. So thank you so much. Thank you so much, Joel, for joining us. Really appreciated the conversation. If anyone listening hasn't checked out Anyfin, I'm sad because you're not global yet, right? Where are the countries right now? There's a good list of countries.
Norway, Sweden, Finland, Germany. And
all right. So if you're listening in any of those areas, check out Anyfin. You can get a ton of better rates on any existing loans that you have. And if you're in Germany, you can cancel your credit card apparently too, which is awesome.
Right. And if you're building this kind of app anywhere in the world, it's a lot of knowledge dropped here. Thank you, Joy. Would love to have actually, run over with you and taken more of your time. This is really good. Enjoyed it.
We'll have to do round 2.
Yes, that's what I was thinking, actually. Exactly.
Thank you so much for having me on. It's been a pleasure.
Likewise.
Awesome. Yeah, thank you. All right. So thank you so much for tuning in to the Appthropology podcast. We hope you learned something that'll help inspire your own work. If you enjoyed the episode, please like, share, and leave us a 5-star review on Apple Podcasts. And that's all for this week. So thanks again, Joel, and we'll see everybody next week.